Hello everyone, and a very warm welcome to today's Experts for Expats webinar. We're following our last two webinars on the fundamentals of investing in UK property and the need to knows of purchasing new build versus resale properties. Today we're going to be focusing on where to buy UK property at the moment. My name's Alice and I'm your host for today's discussion. We're joined today by two industry experts from the Expats for Expats Partner Network who are going to be discussing the London property market and which areas of London expats are investing in, the most popular regions for property investment outside of London and the reasons why. So looking at northern cities, university towns, London suburbs, rural locations, and key considerations when you are choosing where to invest in UK property, including thinking about your long-term investment goals, rental yield, and ideal tenants. So before I hand over to our speakers to introduce themselves, I'll just give a quick overview of how the session will work today. Firstly, this webinar is not just about information sharing, it's also an opportunity for you to ask questions, and you can do that using the Q&A function. So please don't share any personal or sensitive information when you're asking your questions. If you do need specific help, let us know and we can arrange a formal introduction to one of our expert partners. As an attendee, you are not on camera, you're not on audio, but you can communicate with us via the chat and ask questions via the Q&A. And finally, this webinar is being recorded and the recording link will be shared with you after the event. So if you're not able to stay for the whole session, don't worry, you will get the recording. So let's get started. A big welcome to our experts today. I'd like to invite you to introduce yourselves and your area of expertise, starting with you, Henry.
Thanks, Alice. So yeah, I am Henry. I work for a company called Buy Association and I'm the sales director here. So in essence, we are a property investment consultancy and we work with expats and overseas investors all around the world. So for nearly a decade now, I've been advising overseas investors on how to navigate the UK property market and how to successfully build portfolios for whatever reason that might be, personal investment, building a pension, plans to return back to the UK, or potentially inheritance planning as well. I'm also a chartered surveyor with the Royal Institute of Chartered Surveyors and hold a master's in real estate from the University of Manchester.
Thanks, Henry. And Sarah.
Hi, my name's Sarah Mottram and I am a buyer's agent. So I work with clients to help them find investments or even their homes in the UK. And I'm also a financial advisor kind of on the side. Property is my passion, but I do financial advice too.
Fantastic. Thank you so much, Sarah. So we're going to start off today by talking about London. So Henry, we'll come to you first. And during COVID, it felt like there were loads of people who were moving outside of London to go and move into more rural or suburban areas. But now it seems like lots of people are looking to move back to the capital. So is this the case? And if so, what trends are we seeing now in the London property and rental markets? And are there any particular areas of London that are more popular with overseas investors?
I'll probably caveat this with I was in Hong Kong during the pandemic, so I wasn't around. We didn't have a lockdown. I did get locked up in a shipping container for 4 days on a government quarantine site. So anything, it was a bit interesting. But I've researched this and I've got a few stats. So I'll give the stats first, and then I'll say kind of what it means for the property industry, what happened, and how that affected investment all over the UK. So clearly during COVID, people did move out and there was this kind of term race for space, right? We saw a few people leave the cities, quite a few people, but I was doing a bit of research on this and the stats aren't as much as we think it was. So from London, it was only about 75,000 people that ended up leaving London during COVID, which is about 0.7% of the population. It's roughly the size of a large town. Tunbridge Wells was an example. So we have seen a resurgence since COVID. So first point is people did leave, but it wasn't as much as we thought. Second point is a lot of those people have come back, but we've also seen the city centre population swell because of that return to work, because of the opening of cultural and entertainment sort of activities. So I was looking for London in 2024, 30% of all new lets were from people that were previously residing outside of London, which is quite interesting. So yeah, I was looking at the stats from 2022 to 2023. What we saw is a 76,000 population increase, whatever the term is. But over that same time, only 14,600 dwellings were actually completed. So people have come back in, and whenever we talk about the UK, which is a fragmented market, but whenever we talk about the UK, we can always see that there's a supply and demand imbalance. So more than ever now, people are moving back into the cities for some of the reasons I mentioned before, but we can't keep up with that growth. The supply of property, as we've seen, type it in, anyone that's on this call, UK property shortage, you get 10 pages of the Google articles outlining how much of a severe shortage we have. So that's a big factor now on why property prices are growing within these kind of cities. What I would say as well is, and we touched on this on the last webinar, when you look at prime central London, the kind of core zone 1 locations, there's a finite supply of land, and all of these plots of land have now been built on. So even though demand is increasing, supply can't physically increase. There's nowhere to build it. You look at a market like Hong Kong, you look at a market like Singapore, maybe Dubai, they create land, they reclaim land, they build it. But in London, for better or for worse, we've got this situation where we can't actually increase the supply. And that's why property over the last couple of years, or over the last 40 years, has done so well, particularly in somewhere like London. In terms of rental growth and what that's meant, because there's such a huge imbalance between demand and supply, there was 17% rental growth over that same period. So between 2022 and 2023, which is obviously huge. And that is now returning to, I guess, in inverted commas, more normal levels of 2 to 5%. So yeah, it's interesting. We have seen more people come back. I probably would look at affordability because we've seen such high rental growth in a lot of these areas. For any investors that are looking at particular markets or particular neighborhoods within London, I'd probably just pay attention to the fact is in some areas, tenants are now spending 50% of their incomes on rent. So there's only so much that rents can now increase because of that affordability. Question 2, I think you included this, kind of which parts of London are popular, was that right? So again, I was doing a bit of research. So if you look at it based on transaction volumes, so the sheer amount of money being spent, it comes up with Mayfair, it comes up with Kensington and Chelsea, it comes up with central London like Knightsbridge. So that's probably true based on the fact that those areas of London are so expensive. But the people that we deal with, unless there are any Middle Eastern sheikhs on this call, potentially not, the people that we deal with are overseas investors and expats that are investing for, like I said at the start of the call, personal investments. This is putting their kind of hard-earned money to good use. This is inheritance planning, pension planning. So a lot of the people that we look with or work with are looking at these areas which are a bit more up and coming, places where there's a bit more affordability, and places that have the potential to rise in value a bit more. So, personally, I'd be looking at some areas in South London, Oval, Elephant and Castle. There's a particularly good regeneration scheme happening there, backed by very big developers. Stratford is also very popular, and also Wembley. And in these areas, you've got to look at the tenant demographics. A lot of young people are living in these areas, and that's where you're getting the bulk of your rental demand. So they're modern buildings, they're popular with young renters, and they're very well managed, and also compliant with new kind of building regulations.
Thanks, Henry. Sarah, did you have any insights to add around the London property market?
I think Henry's covered pretty much everything off there, but what I would say is prime central London will always have its value and desire for overseas investors and in UK investors. Yes, there was a bit of an exodus, but I think it will always be a good place to buy. It's just depending on people's budgets and price wise, because obviously you are paying for that premium for prime central London. I think also during COVID, the areas that struggled more was maybe the ones that benefit from the ripple effect. So we say that people can't afford those nice prime areas, so then they start to look at the areas just on the outskirts, and they're very, very popular. But I think during COVID, people were like, well, we're not going to squish ourselves into little places just to do that commute, because they didn't have to do the commute. So then people started to look further out that they could commute into. So I think, yeah, COVID did have a massive impact on people's emotional purchases, I think.
Thanks, Sarah. So next, we'll look at outside London. So Henry, where currently are some of the most popular areas to invest in property in the UK outside of London, and what makes these locations particularly attractive to investors? So, for example, are we seeing more of a trend towards urban, suburban, or rural areas, and what's influencing that?
whether you look at urban or suburban areas probably depends on strategy. So I'll get towards that. I'm based in London. As a company, we're headquartered in Manchester, and we've been banging the drum for Manchester for the last 17 years. And to begin with, it was an uphill struggle. So, I was living over in Hong Kong, speaking to, sometimes local Hong Kong investors in China, Singapore, telling them about this new city that they, may have not never heard of, but, it was considered a new place to invest. It was considered, a time where London was doing very, very well, kind of 10 to 15 years ago. People were saying, well, why would I go for Manchester? But we looked at the fundamentals, we looked at what was happening within the city. And at the time, this was kind of 2010, where we had George Osborne as the Chancellor. He was talking about the Northern Powerhouse Initiative, saying, how can we rebalance the UK economy from this kind of over-reliance on London? So we have been banging the drum for a while, and now Manchester is almost considered quite a mature market because it's done extremely well over the last 10 years, especially. So I would look north. North is where you can have more affordability, you can have higher yields, and because there is more affordability, it's got, almost like I was saying in London, it's got more room for growth as well. And that's where we're kind of seeing a lot of the investment now, both domestic, overseas, and institutional money kind of coming in and developing these areas. So I've got some stats on Manchester. It's quite interesting. So it's got the second largest economy in the UK outside of London. The economy itself is bigger than Dubai's, which I didn't realize. Dubai's obviously an incredibly popular place at the moment to invest, but comparing it city by city is quite interesting. One reason for that is 80% of all FTSE 100 companies have a physical presence in Manchester. We're now starting to see people like Amazon, for example, have just expanded. We've seen the Bank of New York Mellon, take one of the biggest commercial office spaces in the whole of Manchester. And that's what's attracting these young people in, that's what's attracting the talent in, and that's also what's fueling the property growth. So number one would be economic growth. And then we'd look at things like student populations and population growth. And this is kind of the same for Birmingham as well, and Liverpool. They've got the largest student population. Well, they all have large student populations, but Manchester specifically has the largest student population in the whole of Europe. So there are 120,000 students, which is good. We don't necessarily rent our properties to students. What we do look at is the graduate retention rates, and 51% of all students from Manchester end up staying and living and working in the city. So each year you've almost got just over 60,000 students graduates, I should say, adding to that population. And these are people that aren't home buyers. Okay, fine. One or two might be very lucky, but these are people that are renting properties within the city centre. They want to live close to the amenities. They want to live close to their friends. They want to live in the luxury projects. And that's, again, what's fueling rental demand. And there are more 25 to 29-year-olds living in Manchester than anywhere else in the UK. So that's kind of core from a demographics point of view. Again, why property in Manchester is doing so well. The city centre, I've got this kind of population stat here. The city centre needs 170,000 homes by 2038. At the moment, we've only got 70,000 planned. So the city centre itself is very small. But what we're seeing now is, because we've seen such a high population growth, skyscrapers, are shooting up, and the city is almost unrecognizable compared with what it once was 10 years ago, never mind 100 years ago. So that's really interesting. We've got the airports, we've got global connectivity to places like the US, to the Middle East, to the Far East. So that's very important. And what I really see, and what I kind of touched upon with Prime Central London, is that there's a window of opportunity actually to invest in that kind of core Zone 1 city centre that's kind of encapsulated by the ring road. That won't exist in 5 years' time. In 5 years' time, you can't buy direct first time off a developer. You'll be buying off, an investor that's already made that investment, who's able to resell and capitalize on their growth. So that, I think, that window of opportunity and being able to invest in the city centre whilst that opportunity still exists firsthand shouldn't be understated. So we don't just sell properties in Manchester. We do. There's a similar story for Birmingham. It's a similar story for Liverpool. You've got some smaller cities as well, and this probably then goes on to strategy. Do you want to go urban or suburban? What you'll find typically is in the smaller cities of the UK, places like Preston. We do some investments. We do a few in Hull, a few in Sheffield, Leeds. Property prices are cheaper, but rental demand is still high. So you'll find that your rental yield, the proportion of income you get as a percentage of the property price, is very strong. What you might find is that the capital growth isn't as high, because you haven't got companies like Amazon or Bank of New York Mellon or HSBC moving their regional headquarters to Preston. It's not that kind of city. So whilst you get a good income, which might be really useful for someone who's looking at building their pension, or who's looking at substituting income because they're taking some time out of work, you won't get that same level of capital growth and price growth.
Thanks, Henry. Sarah, anything you'd like to add?
I think with all even the smaller cities that Henry just mentioned, it's interesting when he mentioned that they're popular cities that we know of, and they tick all the boxes. They've got universities, they've got hospitals, they've got a good developed infrastructure. They're cities that are already developed, so that's all attractive and good for. They're always going to have people wanting to move there and live there and work there. So that demand will be there, but maybe you won't see the capital growth in those cities as compared to buying, say, in Manchester.
I'm wondering as well, just as someone who lives down on the south coast, down near Brighton, what about the popularity of seaside towns for, maybe second homes or property investment?
I've actually purchased myself and for clients some holiday lets, and holiday lets are great because the high yields and for what you could get in that area as a normal AST, as a standard tenancy contract, a year with 6-month break clause, you can almost get a month's rent in a week sometimes if it's in a good area. And so holiday lets can be great, but yes, do have seasonal fluctuations. And yes, I think with COVID as well, mentioning earlier, there was a massive desire for people to have that space and move to the coast. You do have all the problems with that as well. So those areas the prices are massively inflated, and then the locals can't afford them. So you do have problems with that too.
Thanks, Sarah. So our final question for today, and if anyone watching has any questions, please do pop them in the Q&A, and then we will come to you at the end. So Sarah, when you're thinking about where in the UK to buy, what should be your main considerations as an investor? So what are the kind of things that you need to be thinking about before you invest? What questions should you be asking yourself about your longer term plans, etc.?
So when someone comes to me and they say they want to invest in property, I mean, the first thing is budget, because everyone's limited to how much they can actually invest. And then it's talking about their strategy. So what are they investing for? Are they investing for income and high yield, or are they investing for capital growth? And also, what's their time horizon for investing? So all that is massive key factors in deciding where you're going to invest. So you may see an area that's going to have huge infrastructure developments, but it might be a 10-year plan, whereas actually your plan, it doesn't fit in with your investment horizon, which could be 5 years. So timing is really important, your actual strategy and your budget, thinking about the long-term growth. And yeah, you might be flipping a property, so that's very short, going in, developing it. So that's basically down to your strategy and your budget. Location is always the one, everyone says location is very important. And we mentioned earlier, when you're choosing and when you're buying an investment property, you've got to go for an area that's got that rental demand. And so with those areas, you could look at businesses moving to that area, like we just said earlier. And then also we've got things like students, so student lets, thriving area if you've got a big student population. We said about Manchester. Hospitals, some people like to buy properties near hospitals. There's always hospital staff that need to be renting out, especially with the way that the NHS works with doctors moving around the country. So there's always location, really, looking at capital appreciation, development going on. Have a look at the local rental market as it is at the moment. What are the current yields, and will that be sustainable? Is there going to be some changes going on? A healthy economy, lots of job opportunities for people to move to, and affordability budget, mentioned that. So it's all about, really, when you choose an area, making sure it's well researched, it matches your strategy, your investment strategy, and you're prepared to take the risks involved with that particular location.
Thanks, Sarah. Henry, anything to add around considerations as an investor?
Yeah, Sarah hit the nail on the head. I thought one of the sort of the best points there was about your time horizon. a lot of what we do, for example, is centered around these regeneration schemes. So we've got a fantastic investment in Liverpool at the moment. It's part of a £5 billion waterfront regeneration scheme. Homes England, which is one of the government agencies for property, has just given them another £56 million to kickstart it. But this is a 25-year investment plan that's right at the early stages. So that scheme will 100% make you money. But if you're planning on selling that property in 5 years, and by the way, the first phase is not going to be ready for another 5 years, or whatever it might be, that's not the right thing to go for. You're probably better working on something that's a bit more mature, something that can deliver you a cash flow straight away that you don't have to necessarily wait for. So I thought that was a really important point. I think Sarah touched upon it, is whether you want to be passive or active. So I touched on this on the last webinar that we did. A lot of the people that we work with are working overseas, and they want passive investments. They want to be able to buy properties, set up bank accounts, and collect that rental income because they're working overseas, because they've got busy jobs, because they've got busy lives, a family. This is something that should create time as opposed to take time away from that. Whereas other people, if they're a bit more hands-on, they can be active. So actually, look, I want to work with a power team in wherever it might be in London to renovate a property, and that's a lot more hands-on. But the potential gain that you could get from that could be higher. So it's trying to work out, how much of a stance you want to take on it.
Thank you so much, Henry. So we've had a few questions come in, which is great. I'm going to answer the first one, which is Henry's mentioned a previous webinar a few times. Where can I watch that? And the answer to that is if you go to expertsforexpats.com and our property advice section, and you will be able to see the summaries of the webinars there. They are also on our YouTube channel in our webinars playlist, which is at Experts for Expats. And we will make sure that we send links to the previous webinars in an email along with this recording. And if you're watching on YouTube, you will find the links to all the previous webinar series in the description as well. So on to our next question. This one is around do different regions of the UK, so thinking England, Scotland, Wales, have different rules or taxes or anything like that when it comes to property, which might impact my decision on where to invest?
I can answer that actually. So I am dealing with a client at the moment that has properties in Wales, and I'm originally from Wales, and the government there have set up a new scheme for any landlord. They have to join something called Rent Smart Wales, and so you have to, if you're going to manage the property yourself, you have to do a training course and pass the course and make sure that you are qualified and eligible to be a landlord and manage properties. Or if you're going to use an agent, you have to use a licensed agent. So that's something to bear in mind. And then I don't know about Scotland really, I must confess. I know there's a different purchase system in Scotland, but I haven't experienced it myself. Henry, maybe?
Sorry, I don't know. I know Scotland's different. I think, and I'm sorry if I get this wrong, I think the offer is binding. I think at the point of sale. I'm not going to dig myself a hole, but
I think it's offered over. It's a bit of a strange. They advertise a price, and then people have to. It's almost like an auction kind of thing. I think none of us know.
That's absolutely fine. We can find the answer to the question and then we can share later. That's absolutely fine. Okay, next question. So we're discussing UK regions, but how does the UK compare to other countries? What benefits does the UK have over other countries for property investors?
I'll touch on this because we do deal with a number of people from overseas, and especially when I was working in Asia, people would compare the UK market to places in, places like Vietnam, for example, which were considered very, very up and coming, or, Thailand property or Cambodian property, is what some of the local investors would look at. And I think what it comes down to is the UK market is backed by incredibly strong fundamentals of this demand and supply imbalance, a stable currency, which really can't be overlooked in terms of the importance of how that can affect an investment as well, and also a very, very well-respected legal system. So what I would always say to my clients is, look, get your portfolio started in the UK, get that solid foundation, something that you can really rely on. It's considered very, very low risk. And then if you do have a spare, a pot of money to then dabble in other markets, do it as long as you can afford to lose that money. Look at what Dubai is doing. Dubai property is increasing, but has it got the same fundamentals as the UK? Probably not. So am I an expert on Thai property? No, I'm not. I'm sorry, but I can tell you about UK property, and that's why people like it. It's less volatile. It's a stable currency and it's got a great legal system.
Thanks, Henry. Sarah, did you want to add anything to that point on UK investment?
So I used to do seminars in Asia as well, and the UK is particularly attractive to overseas buyers because of the less volatility. So if you plot house prices in UK compared to some other countries, particularly in Asia, we have a slow, steady growth. I mean, obviously we get our dips and everything else, and various economic factors impact on house prices. But generally, if you buy a good property in the right area, then you will see it grow, and you can see almost it doubling every 10 years. But then in other countries, I know people that have bought in Asia, and it is so volatile. You get some winners and losers, and depending if you have to sell, pull out at a certain point, then you could lose significant amounts of money. So volatility, really.
Thanks, Sarah. Henry, someone's just asked for a bit of clarification on one of the points you made around what fundamentals are missing from the Dubai market.
Yeah, so you'll still have the supply and demand fundamentals, but in general, it has less transparency than the UK market, and it can also be subject to more rules and kind of regulation and legislation change, and does have a bit of a volatile secondary market because so many properties are being built at the moment that you can't necessarily rely on the same values that you bought in just because supply is increasing. That might top out, but at the moment it is a bit more volatile than the UK.
Thank you. And this is an interesting question. Someone's asked, are you seeing any environmental impacts on regions such as flooding or water quality? We're considering a retirement move back to the UK and we're looking around the south coast, but flooding or issues with the water companies seems to be problematic. Do you have any insights into that?
I would say a solicitor's there to help you. So you'll always be doing searches when you buy a property. So you can do environmental agency searches on flood risk, and they will pull up, flood risk maps to make sure that you're not in an area that is subject to flooding. I know in parts of the north, for example, still in Manchester, you have to do a coal mining survey, which is a bit of a legacy thing, but that's what the solicitors are there for. So, again, I said this in a past webinar. Do not try and save money on a solicitor. It is worth the extra money you're paying just to make sure that you're 100% protected leading into that purchase.
Sarah, anything to add around the environmental impacts?
No, exactly that. That's what that's what you pay a good solicitor to do, all the mining and the structure of the property and any flood or environmental risks that comes out in the surveys.
Thank you. Next question. If the directors managing a property are suspected of cheating and charging owners unreasonably on service charges, is this reason enough to sell a flat in a premium property?
Yeah, 100%. So in the UK, what you can do is a right to manage. So if enough of the leaseholders in a building, I have to admit, I'm not sure what the formal process is, but I guess complain, I think it might even be 80%, but again, you're gonna have to do a bit of research on this. You can actually, the building owners can have what's called a right to manage that building. And if you have got an unscrupulous building manager in place, effectively kick them out. So if that's not an option, and if you are losing money as a result of a high service charge and you're struggling and it's causing stress and it's causing financial stress, is that a reason? Definitely.
And there are some reforms that are set to come in around leaseholder ownership, aren't there, in order to protect leaseholders?
Definitely. Yeah. So the UK is looking at moving towards a common hold system. So at the moment, for anyone that's on this call, you'd have typically if it's a block of flats, you'd have one single freeholder, which might be the developer or the council. And then each individual flat owner will be a leaseholder on a long lease. So that's typically 150 years to 999 years. But we're moving, or it has been proposed that we move to a system, I think similar to Scotland actually, that is a common hold system. So each individual flat owner in that building has a share of that freehold.
Sarah, anything to add around unreasonable service charges or leasehold properties?
I have experienced it before in the past, and yeah, you can contest it. You go back to the managing agent, and for 3 clients, I've actually helped them do purchase a share of freehold, but they've been in small buildings, not large developments. But we significantly reduced people's service charges because the managing agents were just charging crazy prices and eating into everyone's profits. So if you can get the majority of the leaseholders together, then you can do great things.
Okay, are there any other questions from anyone? Because that has reached the end of our questions. So I'll give it another minute or so to see if we do get anything else asked. While we wait, was there anything, Henry or Sarah, that you haven't said today? Any kind of final comments or words of wisdom for people considering purchasing property in the UK that you'd like to share?
Yes, Trump-proof your portfolio, buy UK property. No, obviously I think it would be wrong not to touch on the fact that we are going through quite a volatile period. I think fear is contagious. You just turn on the news, you look at BBC News, whatever it might be, and it's quite easy to get sidetracked. But again, I can't stress enough, look at the fundamentals of the UK market, look at the fundamentals of property just as an asset class. It's vastly less volatile than any stocks and shares in terms of those price swings that you get on a daily basis. Its property is income producing, so unlike shares, you'll continue to receive an income whilst you hold it. Inflation proof as well, so as costs rise, so does rents over time. And it also has low correlation to equities. So as, for example, the stock market fall, that doesn't necessarily mean that property prices are going to fall either. So it's just as part of a well-rounded portfolio, if you haven't got investment property, just consider it, because it will, in times of these, downturns or uncertainty, it'll just make sure that you can preserve your capital and continue to earn a return.
Well, we will draw today's webinar to a close. Thank you so much, everyone, for joining. If you would like to book a free discovery call to help you with your UK property investment, you will find a link in the chat. We'll just add that now. So that you can complete a form and request an introduction to a property specialist. You'll also receive an email from Sarah within the next day or two sharing the webinar recording and an invitation to have a call with Sarah if you'd like to discuss getting help with your property purchase. And you will find plenty of blogs, guides and resources on our website, expertsforexpats.com, if you are looking for advice in any other areas of expat life, as well as property, including tax, finance, wealth management and relocation. So a big thank you for everyone who's joined us today, and a huge thank you again to Henry and Sarah for coming along today and sharing all of your expertise. Have a lovely rest of your day, everyone, and we hope to see you again soon.